Hey there, everybody. Thomas Wood with ValueCharts.com. It is Friday, October 2nd. We're going to take a look at the S&P. We had non-farm payroll today. It's the first Friday of the month, so you have non-farm payroll every first Friday. And we're going to look at kind of the market cycles that happen with the S&P using this 5-minute chart. So you can see right here when non-farm payroll came out, S&P tanked. And you can see our cycle immediately changed to bearish. It changes. A bearish cycle is when the blue indicator line is below the zero line. Bullish cycle is above the zero line. So we went to a bearish cycle. We stayed in a bearish cycle all the way down until we crossed back to an upcycle right here. So once you cross back to an upcycle, we stayed in an upcycle and have what we call a zero touch, where we go down and test zero and then bounce off of it right over here and right here, and stayed in an upcycle all the way over until right there. So not a bad trade for those of you that were trading the cycles. If you were just using the cycle to say, okay, I have a directional bias based on the cycle. So you're going, all right, we're bullish cycle. We stay looking for long opportunities, which means you watch for a retracement and then get long, watch for a retracement and then get long. If you use that as your filter, then you had several really good opportunities to get long on the way up, and then you would have been exiting when the cycle ended right over here. And now we're entering back into a down cycle, and you'd be looking for it to move back down again. So all in all, not a bad day for those of you trading these cycles in the S&P with non-farm payroll. That's all I have for you for today. So I hope everyone has a great weekend. I will see many of you in the trading room bright and early on Monday. And until next time, happy trading.